Hello everyone. In this video, let's see how to use the Ninja scanner and how to make a decision whether to enter the trade or not. So if you look at the Ninja scanner tile, on the left hand side you have the script name. The right top will give you the buy or sell signal, and the middle is the current market price. And the lower side, on the left hand side, you have the stop loss order. On the right hand side you have the profit, which is the pip difference between the buy or sell signal and the current market price. Now let's take a deeper, closer look on to one of the chart here. Let's take Euro USD for an example. If you could see, we are on the 30 minutes time frame. So the scanner scans the market based on the time frame that we set. Let's take a look at the 30 minutes chart, and the Euro USD, for the Euro USD script, the scanner has given a buy signal at 1.11560, and the current market running price is at 1.11649. Let's double click on this particular tile, and it opens the Euro USD 30 minutes chart into a new window. Let's navigate to the end of the chart. So the scanner projects the signal of these particular buy or sell signals. So you have to trade arrow to arrow, which means when the buy arrow is getting generated, you have to go long, and if the sell arrow is getting generated, you have to go short. Now let's take an example of this particular script. Let's see. We have got a buy signal here, and if you look at the market rate where the buy has generated, so the close price is at 1.11560. So if you remember, that is what we saw on the scanner, so 1.11560. So though the arrow is at this particular price, but the market, you could have entered the market only at the close of that candle, which is at this candle. So once the arrow is formed here, it forms at the close of the second candle. So that is the realistic entry that you could get into the market. And once that signal appears, so the scanner will give an audio alert and a visual change. If it is moving from a sell trend to buy trend, it changes the color to green, and it gives you the notification for you to go long on 1.11560. Now if you have went long on 1.11560, now the market price is at 1.11649, and this is the pip difference that you would get as a profit. Now let's see how to avoid certain trades so that you do not end up in some minor losses. As I said, the Ninja scanner scans for the signal of the buy and sell arrow. If you look at this particular buy and sell signal, when the buy arrow has occurred, the market would be at 1.11755, and immediately we got a sell signal. At that time the market would have been in 1.11687. So you would be actually buying for a higher price, and you would be forced to close for a lesser price, which might be a losing trade. But if you could see, the scanner immediately projects or senses the market is going on a reverse trend, and it immediately suggests you to go for a short. And this might be a losing trade, but the market immediately senses, the scanner immediately senses that the trend is changing on the opposite direction. So you could just complete this trade and enter a new short here, and you will be able to grasp the next wave, which is from this point until this point. When the buy signal comes, you would be at here, so you would be able to cover this particular pip change as your profit. So if you could scan through the market for the previous time frames and the previous occurrences, so if there is a small change in trend, you might end up in a small loss. But I think that's the risk to reward ratio that you have to take into consideration. And the scanner would be profitable when the next major trend comes into picture. So if you could take a look at the scanner for multiple scripts, there could be some smaller entries and exits. And if you are good at sensing the breakouts or the consolidation area, through price action, you could have already averted these particular trades. And though there are like one or two small magnitude of losses that you might incur, if you keep following the arrow to arrow trade, you would cover a maximum profit when the major trends breaks in. So this is a 15-minute chart, and the trend changes are quicker in the 15 minutes. So that's the reason you might be uh, entering and exiting multiple trades. So it is better to go and look at a higher trade at higher time frames, so that you do not get caught in the small market fluctuations, and you can just rally. You can just cover the market orders when there is a huge trend and the market rallies. So once you get a scanner signal, you be sure to open that particular script and take a decision whether you can enter that particular trade. Or if you are new to technical analysis and you do not want to make that decision, you can just go ahead and start trading you know arrow to arrow as per the scanner suggests. But we would recommend to maintain your stop losses as per the stop loss that is shown by the scanner, and keep continuing on the market, so that try to trade in couple of more scripts, so that you do not get caught in the small market fluctuations. And in a longer run, in a period of a week or a month, if you at if you look at your overall portfolio, the scanner is would be a pretty much success for you. Thanks for watching.